Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with a major markets review here on Share Talk on Wednesday, the 18th of March. This is a special here. I used to do this on a daily basis in written form on zaksta.com between 2001 and 2013, but those days are gone. But given where we are in the market, it seems to be a good idea just to revisit that kind of technical sweep that I used to do. Starting off with the monthly chart of the FTSE, and really it looks to me as though there's no real support here until the main one from main support line there from 2003 or so at 3,800. Obviously, the market could find some support here and may even bottom out here around sort of 4,800 to 5,000. But I don't think that is what we're teed up for. I think it looks as though we'll get down to the 3,800 area, even if we bounce sharply from there, as we did, obviously, in 2003 and 2008. So let's see if that particular call pans out. As far as the daily chart look there on the FTSE, if I can just get that. The situation is that we are obviously very oversold, but it looks as though really we're in a bear flag just ready to break down on another leg, a bit like the one we had at the beginning of March, but this one actually looks much more bearish than the other one. And also, obviously, now we have the momentum provided by the dead cross between the 50 and 200-day moving averages earlier this month. On to the DAX, and here you can see that we've had one of the most horrific breakdowns that you could ever imagine for a market. If I can just get rid of this particular window. One of the most horrific breakdowns you can imagine for a market. And also, what's interesting is that even after this great fall, we haven't actually had the dead cross between the 50 and 200-day moving averages yet. So the fact that that hasn't happened is actually a negative in the sense that it's the run-up to that cross which tends to be the most negative part of the technical cycle, as I've said on many previous occasions in other contexts. And really that would suggest that there's no real chance of a rebound here at all over the near term. Going on to the similar 1-month chart there, you can see that there is a support area from the 200-month moving average, and that's there around the 7,900, 8,000 area at the moment. So another 500 points to go at least for this market on that particular basis. You can see that in 2008 we actually bounced just below the 200-month line again in 2011 on that line. So given how horrific the situation is at the moment, it would be very surprising if we didn't repeat a test of, let's say, 7,800, 7,900, something like that, even if this market then rebounds after that. So at the moment, down before up would appear to be the most obvious course there. On to the Dow and the monthly chart here. Here, rather difficult to get too much information, but I suppose you can see there that given that we've gone back past that 21,000 area, which was resistance on the way up in early 2017, the next area down really is between 17,500 and 18,000 as a target. So still 10% possible downside for the Dow, the Dow Jones over the near term. On to the S&P, where we've got the S&P futures here, rather more straightforward chart here. That was a rather messy one there for the Dow. Here you've got the last support there around 2305, which I presume everybody's looking at and everybody's hoping that will be the low for this market. I don't think that'll be the case. I think it's more logical that we would head back down towards the 200-month moving average, 1631, as the DAX has shown us as well. Horrific bearish divergence here on the monthly chart between that peak there in February last year, and the peak in February this year, or January this year, for this market. So I think there's going to be a lot more negative momentum for this market. Just want to finish off on this particular sweep with crude oil, because that is the, I suppose, in a way, the market at the moment, and the biggest barometer of what's happening as we're looking at the markets at the moment. Here, one would say that lots of scary predictions as far as the downside is concerned. Looks to me as though for crude, 15 to 17 dollars is the area that one should look at. That's a line of support on the monthly chart from November 2004, and heading towards that's $17 is the actual number, but one would imagine there'll be a bit of an overshoot given the way that this market's going. Interesting that the crossover there between the 50-month and 200-month moving averages was actually one that normally precedes a move to the upside. So this really has pulled the market. The market has really pulled the rug from under the bulls, rather, and one would expect to see much more of an overshoot on this market than perhaps in the other equity areas that we've seen so far today. That's it from me. Join me again next time.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.